Hello, everyone. Good afternoon. It gives me immense pleasure to welcome you all to the India CFO Forum 2022 Virtual Roundtable Conference by CLEAR, organized by Biz Integration and supported by YA19. The theme of today's virtual roundtable is the CFO's role in transforming enterprise compliance. Let me start with a quick introduction of myself. I am Jyotsana Gupta, your host for the event. I am the editor-in-chief of Y19, the IT media arm of ZNet Technologies, a leading cloud and IT services distributor. So let's begin today's conference. In a data-driven world, the roles and responsibilities of leaders are changing quite dramatically. One such role, which is always at the center of discussion, is the role of the CFO, the Chief Financial Officer. There was a time when we talked about CFOs, we primarily focused on functions like accounting, forecasting, bookkeeping, etc. But today, the CFOs are spending a majority of their time on strategical and even non-finance related activities like performance management, organizational transformation, capital allocation, support for digital capabilities, compliance, and more. The contributions of modern CFOs in the success of an organization have expanded out and above from the CFOs of the decades ago. Today, the modern CFOs need to be at the table to help their organizations navigate through complex and ever-changing business environment and compliance requirements. Today's conference will primarily focus on the role of CFOs in managing compliance and risk in their organizations and strategies to be compliant. Now, let me quickly give you an overview of the agenda. We will start with a 15-minute session by Dr. Sanjeev Gemawat from Dalmia Bharat Group, followed by a 20-minute session by Mr. Prateek Killa from CLEAR. Then the control will be handed over to our moderator for an hour-long panel discussion in which the esteemed panelists will have a discussion on the power of a CFO to transform business activities. Let me now welcome Dr. Sanjeev Gemawat, Executive Director, Group General Counsel, and Group Company Secretary, Dalmia Bharat Group, who is a guest speaker today for this conference. Dr. Sanjeev is a corporate lawyer, chartered accountant, cost accountant, and chartered secretary from India and the UK. He is a postgraduate in law and holds a doctorate in insider trading, besides a specialization in international trade laws and WTO from ICAI. He has nearly 3 decades of experience as the head of legal, taxation, risk and compliance, regulatory, corporate, and secretarial functions of esteemed corporates and MNCs across industries such as automobiles, real estate, infrastructure, etc. He has been recognized as one of the India's finest in-house counsels and has been honored for his outstanding contribution towards in-house legal community by ICCA and the Law Society of England and Wales. He has also been honored as the most influential corporate counsel and company secretary by ACOS. Welcome, sir. Keen to hear your insights on embarking on a regulatory compliance journey.
Thank you very much, Jyotsana, for introducing me. I would like to thank, of course, Business Integration, Wire, and also CLEAR for inviting me to share my views on this very, very relevant and interesting topic, and which is a cause of concern for almost all corporates, but at the same time, this is what is the future as far as corporates are concerned. I have been given 15 minutes to give my perspective on this very important topic called the regulatory compliance journey. And the topic is embarking on a regulatory compliance journey. This is what the topic has been given to me. I will spend this 15 minutes in 3 segments largely in terms of expressing my views that what this compliance ecosystem is all about, what we are talking about. And the second part which I would like to cover is that why there's a need of an effective compliance program or effective compliance system. And in the last, I would be sharing my views how to embark this compliance journey. Now, compliance we all know. traditionally, 3 decades back when I came into the profession, when we used to talk about compliances, we used to mainly talk about compliances with regard to labor laws, taxation laws, direct and indirect taxes in terms of procedural requirements and so on. And in fact, that period continued. But then in the last 2 decades or so, the whole compliance program has undergone a complete change and shift. It's not that the legislations were not there earlier. Legislations were there earlier also, but then in the last 2 decades, we have seen multiple legislations and regulations coming into force. So this is one side of this story. And the second story is that the enforcement mechanism has got further strengthened by the regulators and the government organizations. So today, when we talk about the compliance world or compliance ecosystem, we are talking mainly about a cobweb of multiple regulations which are spread vertically and horizontally. When I say vertically and horizontally, I essentially means that vertically from a government standpoint, there's a central government. As you know, in our ecosystem, there's a central government. There are various central legislations, central ministries, and so on. Then there's a state government where you actually operate as far as your offices or plants or the operational activities are concerned, where you need to have multiple state legislations, state regulators, and then you have the local regulators in terms of local authorities and all that. So from a vertical standpoint, there are largely central government, state government, and the local authorities. But then if you are an organization who is operating in multiple jurisdictions or a global organization, you end up having regulators from those very jurisdictions, and those regulators would be spread almost everywhere. And when we talk about this vertical spread of those regulators, of course, I'm not excluding anyone. There would be, say, competition law, then there would be competition commission, or if there's industry-specific regulators, then telecom authorities, or the mining authorities, as far as mining laws are concerned. In pharma companies or banking companies, there are other regulators, and besides, there are normal environmental regulators, even of course the labor laws related regulators and so on. At the same time, there's this spread as far as compliance cobweb or ecosystem is concerned. There's a horizontal spread as well. And when I say horizontal spread, then there are multiple stakeholders which we are talking about, like vendors, employees, labor, you name all those, investors, shareholders, and there are multiple stakeholders which are horizontally there. Now, when we talk about the compliance ecosystem, we are talking about the compliance ecosystem which is taking care of this cobweb of this legal framework, legislative framework, or the regulatory framework. But then, in the last a decade or so, there's a further changes as far as the compliance ecosystem is concerned, and those further changes are mainly emerging out of two things, which which comes to my mind. One is that we are on the edge of the fourth industrial revolution, and the fourth industrial revolution teaches us that today we cannot, or we cannot talk solely about the shareholders value enhancement. We are talking about the stakeholders value enhancement. And you might be noticing today that ESG is no longer a fashionable term today. In fact, organizations are going forward in terms of following the ESG part, and ESG would be nothing but the stakeholder value enhancement. Similarly, if you might have noticed that the ESG and GRC, which these terms which got developed 2 decades back, today they are showing their relevance, like GRC in the governance, risk, or compliance. I think almost all organizations are today much more focused as far as these basic objectives are concerned, and organizations are talking that yes, the stakeholders value enhancement is the key today, because fourth industrial revolution teaches that the technology would be everywhere. The artificial intelligence would be everywhere. Internet of Things would be everywhere. And all operations, whether this is a traditional core industries or the tech industry, the technology in one form or the other would be everywhere. And this technology further leads to the more and more compliance related issues and compliance related requirements. Why so? For the simple reason that if there is an integration as far as this cobweb of vertical and horizontal stakeholders are concerned, then to that extent, the organization should be adapting themselves with the same kind of technology to take care of those very requirements which are being mandated under this cobweb of regulatory framework. You might have noticed in the recent past, we are talking about integrated reporting. Today, when we are talking about integrated reporting, Ministry of Corporate Affairs, Securities and Exchange Board of India, they have released their, formats of the reporting part. Then there are the Companies Act 2013 got further amended in terms of various disclosure and transparency related requirements and so on. And those very requirements in terms of the transparency or disclosure, they are somewhere linked with technology. Because if you say that you need to have a software, and that software should be, accounting software where you can have the audit trail, etc., or enabler of the audit trail, or you talk about the even, today when there's a circulars in terms of the forensic reports or the forensic study, if you have conducted, you will have to file that with the government authorities. The frauds has been defined today under the Companies Act, and there are multiple implications as far as the various activities of the organizations are concerned. Now, in this kind of cobweb of system, I think there's a more and more need in terms of following the regulatory requirements. But then it also gives us a challenge that there should be an integration and collaborations from the internal from the organization standpoint also, because today the regulators, they are integrated, they are collaborating with themselves. Now, in a situation where the regulators are collaborating and integrating themselves, can we have a system whereby our organizations or within the organizations we are not, collaborated, or we are not integrated? So this is what the organizational or the compliance ecosystem which I'm talking about. I come to the next part of the whole process. And next part is that why this, if there's a compliance ecosystem, but then why we need a compliance program? Because traditionally we have been adopting a compliance program, and we have all witnessed that, where there used to be a checklist of compliances, there used to be a certification process, and that process is still there. But then largely the compliance program were based on the compliance checklist and the certification, where the CFOs or the company secretaries and CEOs, they used to give to the board the certification process. But when we talk about today's compliance system, then perhaps we are going much beyond that certification and compliance checklist, largely because of two factors. One factor is the technology is playing its role there, and the regulators are integrated, they are collaborating with themselves. Now, because of these two things, can we afford to have a non-compliance? Answer is certainly no, non-compliance, because non-compliance would be impacting certain things. Now, why effective compliance program is needed? Because the non-compliance is impacting three things. In my assessment, in my view, the three things are very important. One is, either it would lead to that non-compliance might be a small non-compliance, but then that small non-compliance might be impacting your reputation. So reputational risk is too high of the non-compliance. The second part is that any non-compliance, if that leads to disruption, then we need to be very careful about that, about the compliance part. And the third part is the financial obligation. So I categorize any non-compliance of this cobweb of the ecosystem of compliances, that the consequences are in three categories. One is the reputational loss. The second is the business disruption of any manner, and the third part is, of course, the financial obligation. Now, to take care of all these aspects, that we can, we can create a hedge, or we can have a system whereby we do not end up having this kind of situation, whereby a reputational loss or this disruption or financial obligation could be avoided. Undoubtedly, we need to have the right system and process in place. Above all, besides all this, And since it's a CFO forum, it's my responsibility to mention that since regulators are collaborating and CFOs are the easiest target, because ultimately all these compliance processes are are revolving around the CFO's role. And if that is revolving around the CFO's role, he is the KMP, he has a personal liability as far as those non-compliances are concerned. All the more reasons to have an effective compliance system in place. Now, the next thing which I wanted to express my views on is that how to embark on this compliance journey. In my experience, I have seen that period of 3 decades back also, the compliance checklist and certification process. There was, ultimately after a point, the organizations used to give lip service to the whole process. There would be, somebody would be giving certificate, that certificate gets placed before the board, etc. And so, and the largely the reasons were that those compliance processes and systems, they were not, easily comprehensible. They were not sustainable in nature because they were too legalistic in its, in terms of its implementation. So we need to accept this reality today that compliance is no longer a process of following a paper checklist kind of, or a paper checklist or the certification kind of process. Compliance process today is creating and establishing absolutely a behavioral and attitudinal change towards ethics and governance, because ESG or the GRC mandates that the moment we have that change in the behavioral and attitudinal change, and that is more focused towards ethics and governance, I think we would get our results in terms of dealing with this compliance system. I would also like to highlight here that any compliance system, if we want to implement, there would be largely 5 steps of this. But the most important step is the leadership commitment. I have seen organizations, they start compliance process, but then they are not sustainable because they have been prepared in a more legalistic manner. But then above all, the top level management or the leadership's commitment is not there. If the leadership commitment is not there, it's very difficult to implement the compliance process or compliance system. And of course, as far as the 5 steps are concerned, as we all know, of course, the identification of that risk or the identification of the compliance requirement is the key. You cannot have because there are plethora of laws and regulations. If you remember, the economic survey of 2020 mentioned that there would be, even for manufacturing setup, there would be nearly around 7,000 compliance requirements. Now, in a situation, and that is only with regard to setting up of the process. I'm not talking about the continuity of the business, so many other requirements today which we are facing. So in a situation like this, identification of the right kind of compliance requirement, that largely depends on your nature of business. That is the key as far as the whole the process of compliance is concerned. The second important part is that those compliance requirements on a standalone basis are absolutely irrelevant. They need to be aligned with the business goals. Unless they get aligned with the business goal, you cannot get the commitment of not only leadership but across the organization, because ultimately compliances gets done or completed by the ground level people. So you need to have the ownership, you need to have the buying of those all across the organization. So they need to be linked with the business goals. For example, if suppose somebody environmental issues, as an example, if there is any environmental non-compliance and that leads to your shutting down of your plant, it is impacting, it is leading to the disruption of the business. And if that disruption of the business is causing a problem, then all these functions in an organizational setup would be concerned about it. It is no longer a work of only the environmental team. The sales and marketing, the manufacturing, the finance team, everybody would be concerned about it. Of course, the legal team as well. Now, so this alignment with the business goals is the key as far as any compliance program is concerned. And I have noticed and I have seen that most of the organization fail to do with the linkage as far as the alignment is concerned, and that is where the compliance program fails. And of course, one way of doing this is linking it with the KRAs of the people also, or KRAs of the department also. The next step, which to my understanding is very important, is the training part of it, and training and engagement across the organization, which is too critical as far as the whole process is concerned. And of course, the reporting system, and which should be an efficient and effective reporting system. Just to just to conclude, if suppose when we say that compliance is a journey, undoubtedly compliance is a journey, because compliance cannot be an end. Compliance is a journey only, because for the simple reason, because compliance is an absolutely dynamic process. It keeps on evolving. There are new regulations would keep on coming. Technology would keep on changing, and the moment this technology changes, the regulations changes, this dynamism would happen. You need to institutionalize the process of the compliances, and this journey would continue, because ultimately this is not an end. This is just a journey. You need to create that behavioral kind of changes. Now, in the end, if I want to conclude on this, my suggestion would be, it is CFO's role, and CFO's role to help develop a sustainable and effective compliance approach that is right size for the business. It should be easily comprehensible. It should be operationally implementable. It should be collaborative and integrated with the business goals. It should be agile, and it should be sustainable. So this is how I look at the whole compliance journey. Now, in the end, I would just conclude with these three I's, and these three I's for this compliance journey is the innovation, the investment as far as the technology is considered, or the integration or the automation of the processes are concerned, and the implementation. And I think that these three I's are important for any compliance journey to be successful, which is innovation, investment in the integration and automation, and the implementation of the process. I'm very happy that the organizers have arranged this kind of discussion, and I understand that in the panel discussions there would be a lot of discussions in terms of the use of technology as far as compliance process is concerned. So with these words, I want to conclude that yes, this journey we need to complete. We have no option. Regulations, right or wrong, they are the regulations, and we need to comply with this, because non-compliance would lead to much more problem as compared to the money which gets spent in terms of creating this compliance process or system. Also would like to add one more thing, that normally in this kind of world with so many regulatory requirements and the technological changes and advancement, etc., it's at times difficult for the organization to develop the compliance process with the internal team members. You might be needing, depending upon the organizational size, some external help in terms of institutionalizing this process. I think that needs to be taken care of. And with this words, I just wanted to conclude. Wish you all the very best, and best wishes for the remaining sessions as far as this conference is concerned. Thank you very much. Thank you, Joseph.
Thank you, sir. It was wonderful hearing from you. Compliance is no longer a process. It is actually creating an attitudinal and behavior change. Perfect line, sir. Thank you. There are a lot of insights to take home.
Thank you very
Uh,
much.
I
My
would like to let attendees know that we are also live on LinkedIn and on webcast. Next, we have a session on the increasing role of technology and network in compliance by Mr. Prateek Killa, Associate Director, Corporate Strategy, Clear. Mr. Prateek is an experienced senior associate with a demonstrated history of working in the management consulting industry. He is skilled in financial accounting, financial risk, corporate finance, derivatives, and valuation. He is a strong professional with a Master of Business Administration focused on finance general from the Indian School of Business. Talking a bit about Clear, Clear is India's leading technology-enabled compliance platform that fuels the growth story of organizations across various industries by providing SaaS solutions that are proven to facilitate savings, compliance, and convenience through end-to-end solutions backed by advanced AI and innovative technologies. It is trusted by over 3,500 large enterprises. Clear is also the title partner for today's conference. Welcome, Mr. Prateek. Let's hear more from you.
Uh, Hi, good afternoon, everyone. Just before we get into it, can you hear me and see me all right?
Yes, we can.
Great. So I'll quickly share my screen and walk you through. Just give me 1 second, asking for system permissions.
Yeah, hi Pratik, good evening.
Hi, good evening. I'm just trying to share my screen.
Sorry, your voice is feeble.
Uh, Hello, can you hear me all right?
Yeah. Pratik, now we can hear you. So
Do it.
we'll just wait. I'm Rohit only. We'll just wait. I think we need to start by 4:40. Um, we'll just wait for a couple of minutes and see for everybody joining. Then we'll start.
Okay, sure.
Pratik, your presentation, please. You can start with your presentation. Then Rohit will take over with the panel discussion.
Sure, Urvashi.
Yeah.
Yeah. There's some technical issue, Roshi, that I'm facing. I'm unable to share my presentation. Do you have a copy of it?
Oh, I think Urvashi have to give rights. Uh, Urvashi, whoever is like the technical host,
Yeah, sure.
yeah, they have to give him rights.
Kirish, please give them access.
Hello, everyone. There's a technical glitch. The team is working on the same. Kindly be patient.
try and give me access now to share my screen? I can see my presentation now. Okay. So I'll quickly first introduce myself, right? So I'm an associate director at the corporate strategy team here at Clear. I work very closely with CFOs across multiple industries and organizations in trying to help them get compliant using technology, right? So that is my core competency. And to give you a brief background about where I come from, so chartered accountant by qualification, a management graduate. Prior to Clear, I was working with the Boston Consulting Group as a strategy consultant, helping them manage multiple strategy and implementation projects, right? So before I came onto this side, right, where I help CFOs get ahead of the curve in terms of compliance, I was also on that side of the table, right? I was also working in industry in a leading steel manufacturer in India, where we were trying to manage the entire gamut of compliance, right? And I can tell you, basis my personal experience, that staying compliant with the multitude of laws that India has is not easy, right? As you see on the slide, there are about 170 compliances that every business needs to manage, right? Some of it on a quarterly basis, some of it on a monthly basis, some of it on a yearly basis, but nonetheless, it is a top of the head pain point for all the CFOs that we speak to. Right? So the one part of the entire conundrum is that you have multiple compliances to do, but on the other hand, it does not really deter anybody from moving away from it. Right? Each and every company wants to stay compliant. Right? There is no doubt or there is no second thoughts on it. So the conclusion that I want to draw out here is that given the challenging situation that we all are in, it is extremely difficult to be compliant in the current scheme of things, right? So it is challenging, and yet we need to do it, right? And we will talk in depth about why is it challenging and how can we solve for it. So one of the key factors that we've realized causing so much of pain across organizations, right, is that now multiple concepts are integrating or are being looked at in conjunction with each other, which was not done before, right? So, for example, when you talk about an era which was pre-GST, there were two concepts which were existing in silos, right? On one side, there was the compliance side of things, and on the other hand, it was supply chain, right? Both of them were not integrated. There were different departments looking after each of these problems, and there were different solutions which were absolutely not integrated with each other, right? So, for example, from a compliance perspective, there were filings that you needed to do. There were, there were paperwork was very tedious. There wasn't anything digital that was happening, right? And there wasn't, again, the regulators were also not sophisticated enough to be able to track non-compliance at at a very, very minuscule level. That has changed. Now, with the advent of technology, with the advent of with government leveraging analytics, big data, right? AI/ML, they are now integrated both supply chain and compliance as a concept, right? Now it is no longer a tax team problem, the entire compliance issue, right? It's no longer just one team's problem. It occupies a primary headspace in the mind of the CFO as well, right? And that happened right in 2017 when GST was introduced, right? The entire concept behind GST was that there's one nation and one tax as the objective. Now, with just the introduction of GST, you now got dependent upon your vendors and suppliers in order to be compliant, right? In case your vendors are not compliant, either you would lose upon uh, or you would lose upon your money on the table, you would not be able to claim 100% of your eligible credit, or you take routes which are probably not the best in terms of your compliance rating. Right? So GST started this entire transformation, which was further uh, taken ahead by introduction of the e-way bills and e-invoicing. Right, each of them meant that now your business partners, right, your vendors, your customers, your suppliers, each of them, the compliance history of theirs became your problem. They're not just operating in silo where you don't care who your vendors are, who your customers are. You would have to ensure or make sure that they are also compliant, right? So it became a major evaluation criteria when onboarding a vendor. Right? So all of the entire tax reform that has happened, that has further enunciated the need for introducing technology in your entire compliance process. Now, this is again basis the user research that we did here at Clear, right? And we spoke to about 200 of the largest Indian enterprises that exist. Right? The common thread across each of our conversations was a very similar kind of a theme, right? That it is extremely difficult to manage 100% compliance, right? And there were several reasons that came out of it, right? Some of it being that the laws are constantly changing. I'm not able to keep up with it, right? Or there are too many counterparties involved in my current transactions, and then it becomes impossible for me to do the reconciliations or to be able to check their compliance history on a manual basis, right? The other being government is moving towards real-time compliance, right? They are now on the lookout of non-compliance in a very digital-first manner, right? So if you look on the right-hand side, right, the most interesting article, and I keep talking about it to the people I speak to, is in terms of the integration of your e-way bill with FASTag, right? Now, the moment a truck leaves the factory gate, right, the FASTag system would be able to automatically see what is the kind of weight that they're carrying, and it will be integrated and checked against your e-way bill if it is tallying or there is triangulation or not, right? So the government is actively moving towards the entire compliance suite being digital, and you can't be left far behind, right? So you would also have to stay one step ahead of the curve, right? You have to ensure that you use or you leverage technology in order to be compliant and not be in a situation where the government has come after you and is seeking details, notices, or penalties interest, right? So it's in absolute your interest to be leveraging technology to be compliant. Right now, so we've seen the causes of this challenge, right? Now I want to focus on the kind of impact that happens on your bottom line because of the fact that you're not, say, either 100% compliant or we're using suboptimal practices to become compliant, right? So again, basis our research, what we figured out is that there are, uh, even though 100% of enterprises wants to be compliant, only about 25% of enterprises are being able to meet that mandate, right? 75% enterprises are not 100% compliant. They either miss filing on time, or they claim more ITC than they were supposed to, or their vendor partners are not issuing invoicing even though they're applicable, right? So that is the first impact, right? The other impact is, and which hits directly to your PL statement, is that 80% of enterprises would leave a sizable chunk of money on the table, right? Might be on account of your vendors who have not filed and because of which you're not able to claim credit, or because they filed delayed and because of which your working capital gets stuck, right? So both of these are situations where you don't really want to be in, right? So if you are in that bucket where you're losing money and you're not 100% compliant, the impact on your profitability is significant, right? Because 6 to 8% of your overall profit and loss gets impacted if you're not on the right side of law, right? And your 5 to 7% of working capital gets blocked because of it. So it is, as I mentioned also before, right? It's just not about you being compliant. It's also your headache to ensure your vendors, your forward, your backward chain are compliant, right? You in a you need to know on a real-time basis if your vendors' GSTINs are cancelled or disabled by the government, right? You need to stop doing business with them. This is just an example that multiple businesses scale on. So it's a typical example which resonates with most of the audience that I speak to. Right? So this is just one part. Right? On the right hand side, I've mentioned few more questions that typically again is where a lot of organizations falter. Right? So for example, the e-invoices issued by vendors. Right? Do you feel that are they authentic or not? Right? The I mean, are your partners requesting for an invoice discounting for sustainable business, but because your processes are manual, you're not able to leverage on that, right? On the payment visibility from your dealers, right? Do you have a bird's eye view of whatever invoice is raised with your dealers, how much have he paid and how much is pending? To run multiple reconciliation audits to ensure that everything that you've recorded in your books and everything that has been filed by your vendors are accurate. Right? So these are multiple pain points that can only be solved through by using technology. Now, so once we've spoken about impact, right? Now, let's speak about what a typical CFO's bandwidth or workspace look like, right? So what we feel is a CFO's job, right, can be essentially categorized into 5 parts. Right? The first is the very basic record keeping and reconciliation, where I mean he is the custodian of the financial position or the financial situation of the company, right? So that's a primary part of his or her job. And the other part is in terms of transacting with vendors and distributors, right? Because there's a uh, payment, uh, the process involved, it also comes under the direct purview of the CFO, right? Cash management, payments, receivables, credit management. This is also a major part of a CFO's workspace. Compliance, given that now all of it has is linked with the every activity that you do in a business, it essentially requires a CFO offsite, given that a CFO would be at the at the helm of things in an organization. Compliance also comes under his or her purview, right? And planning and budgeting as a more forward-looking manner as to how do I need to run my business to be able to reach there. Now, the so the other point that I wanted you to take home today from this presentation, right, is that the way you're running your current business is not sustainable, right? Because so again, as a CFO, you have two partners who enable you to function smoothly, right? One is your consultants, right? A big four consultant, say, or a consultant from a CA firm or any other corporate consultant, right? Who would help you across your business functions. And the other is your ERP system, where using the software, you're able to now have a single source of truth or manage multiple processes through one single software, right? These are two work streams or partners to a CFO, helping him discharge his all the 5 duties that he has, right? Now, both of these partners are not equipped to provide you the solution that you need to in a long-term horizon, right? Because of the few reasons that I've outlined, right? So for say, let's talk about from a big four perspective or a consultant perspective. the entire business model or the kind of service delivery that a Big Four brings to the table, they are not technology first companies, right? They have a legacy technology that they use to deliver projects to you, right? The tools that they have are resources, right? They will give you two associates or two associate consultants to help you with your filing, right? They would reach out to you one day before your filing, take data from you, your process ends there, they would do filing, they would do calculations, reconciliations, and file on your behalf, right? This is not sustainable in the long run, right? Because we've seen that technology is an important cornerstone for you to stay compliant in the long-term horizon. You need technology first players to help you in this regard, right? There is, there's a breakage in communication that happens between your consultants and you, right? Because you send them data over email, they would then take that email, run calculations, and send back the finished file to you, right? There is absolutely a big communication gap that happens between your consultants and you, right? Whatever they're doing, you're not aware, or on a daily basis, they don't take you into consideration whenever they're drafting anything, right? So there's a big gap that needs to be bridged here. Right? And they just help you with the one line of process, right? So, for example, for your GST compliance, if they're helping you through it, they would help you file, they'll help you do reconciliation, they'll help you respond to notices, right? But the second order implications, like blocking payments for vendors who are not compliant, right? Or giving you insights in terms of are there any avenues for you to be able to optimize the amount of tax that you pay, right? These are not done by a Big Four company or any consultants for that matter, right? So, at the end of the day, you become so dependent upon them that there is a business continuity risk as well, right? If tomorrow you decide to move away from them, your team is not equipped to be able to handle it in-house, right? And that is not a situation where you would want to be. So, therefore, we very, very clearly, or we very, very, we have a very strong opinion towards it that having a Big Four consultant or any other consultant will not help you in the long run in managing your entire compliance burden, right? The other part is your conventional ERP system, right? So the fact of the matter is that India is not a target segment for these ERP companies, right? Be it SAP, be it Microsoft, Oracle. Both of these three biggie total combined, their India market share is the India becomes 5% of their total market when you look at it from that perspective, right? So they're never thinking about India first in their approach. They would develop solutions for our Western counterparts, tweak them in some shape and manner, and will sell us that solution, right? It is never built for India. So, and Indian compliance problems or Indian compliance challenges are very, very different from what they have. Right? So we need a solutions provider where India is their only or the primary market for consideration. Right? Now the other part from an ERP perspective is that they would take a significant amount of time to be able to manage or to be able to come up with the changes that the government does on a regular or a day-to-day basis, right? The government comes today and says, okay, e-invoicing is mandatory for you from December 31st, right? Now, if that is 2 months in advance, there is no way on earth that a SAP or a Microsoft Navision or Dynamics would be able to give you that functionality on your ERP system within the next 2 months, right? So not only are they not India first, they will need significant amount of time to be able to get the regulations mapped onto their product. So that is why, and again, they just help you with record keeping and reconciliation, right? The other four aspects of a CFO's job is where they don't even touch. So that is how we wanted to establish that a consulting model or your ERP system will never be enough for you to be able to be 100% compliant. Right? Now, So now we've spoken about, right, that there are problems, what is the impact of those problems, and what are suboptimal solutions, right? Now coming to the next part of it, right? If you have to make a fresh start, where do you start today, right? How do you move towards compliance, or how do you start looking about compliance from a technology perspective? So again, this is based on the user research that we carried out. If you give a genie to a CFO, right? And the genie grants 3 wishes. What are the top 3 wishes that any CFO would ask for? Right? The first is digital everything, right? Everything from invoicing to filings to payments, right? Everything is digital, right? And by digital, I just don't mean, right? I mean movement from a paper flow to say a flow on your computer, Excel, Word, right? It also means the process is also digital, right? Say for example, if you have to, I mean, a vendor has to make a requisition for payments. He just digitally requests it, and you don't have to do multiple things between many departments to be able to process that payment, right? There has to be a single workflow where a vendor requests payment, it comes to you on the same workflow or on the same UI UX. You're able to approve the payment and the payment goes through, right? That is something which I mean by digital everything. The next part to it is automation everywhere, right? I mean, a precursor to having everything digital is having an automated workflow, right? Your reconciliation that happens, which you have to do manually on an Excel or on a tool, that is also happening in a semi-manual way, right? Where you have to trigger, right? You have to download to from the government website, you have to upload your PR, and right, you have to initiate the reconciliation. What if I tell you you can automate it 100% end to end, right? Right from the moment where 2A gets automatically downloaded on a pre-decided schedule, your PR gets uploaded from your ERP directly, and the reconciliation results are sent to your inbox on a Sunday evening, and you can start looking at it on a Monday morning, right? That is the extent of automation that I'm talking about. Right. The third aspect to it is single data source that we can agree on, right? So in a typical organization, what we have seen is there are at least 3 sources of any single information that exists in the company. So if you can have one single source of information for all of your data that is floating in the organization, that is the best case scenario. That's the number 3 wish that an organization has. So broadly, these were the points that I wanted to talk to you. I'll just briefly conclude the session, right? How you have to move towards real-time compliance, right? That is your end state objective. The phase 1 is manual compliance, where you do everything manually. The next phase is assisted compliance, wherein someone comes in, helps you manage your compliance. The third stage is your integrated compliance, where your ERPs or your systems are integrated, but it still functions like in a dysfunctional manner, right? That is the third phase, and the last phase is real-time compliance, right? Everything happens in real time. You have a single source of truth, a dashboard for everything, and you're able to manage your compliance like in a real time. That is what the end state goal should be. So this is, I think, what I had. There are other slides with which I think we can skip. So any questions, I'd be very, very happy to take them.
Thank you, Mr. Pratik, for this great session. Attendees, as Mr. Pratik mentioned, if you have any questions, please feel free to add them in the chat window. We are also live on LinkedIn and webcast. So next, we will move on to the most awaited session of the conference, the panel discussion on the power of a CFO to inspire, drive, and transform business activities. For this, I would welcome Mr. Rohit Lodha, Associate Director, Clear, as the moderator for this panel. The panel will focus on the shifts in the key responsibilities of the modern CFOs and how they now play an integral role in inspiring and driving change across their companies. He will be accompanied by, I would request panelists to switch on their videos as their names are announced, Mr. Rahul Malhotra, Chief Financial Officer, Integrion, Mr. Yash Arora, Chief Financial Officer, Indian Oil, Adani Gas Private Limited. Mr. Raghuram Krishnan, Director Finance, Adobe. Ms. Hemlata Nevatia, CFO, Allstate India. Mr. Inder Singh Bisht, Finance Head, South, Ogilvy and Mather. Mr. Deepak Iyer, Senior Director, Finance and Data Transformation, Capgemini India. Over to you, Mr. Rohit, for taking the panel ahead. If the attendees have any questions, please feel free to add them in the chat window.
Thanks, Jyotsana. Uh, Good evening, one and all. We are live with our favorite topic, that the power of CFO to inspire, drive, and transform business activities. So, guys, I will welcome my co-speakers. Before that, I will just give a brief intro. The role of CFO is not restricted with respect to only finance silos. This gen industries, the Gen Z industries are demanding more from a CFO. Okay. And in the last 2 years, we have seen multiple CFOs being an important lever in protecting the going concern of the company, right? Uh, Today, we see from a capacity building to making changes which smooth out the entire process in the being company is being followed by the new age CFOs. So this session will be all about uh, how CFOs are leveraging in different aspects of business and vice versa in transformation. Right. I welcome everybody on board with my speakers, and let's get started with our first question. Uh, okay. So the first question I start with Rahul Mahanotra, sir. The new CFO, okay, is under a strict pressure to prioritize, transform, and repeat. Okay, what are your views on defining this, and how you see your colleagues CFOs are also coping up with this?
Sure. Uh, Good afternoon, good evening, everyone. Hi, Rohit. Thanks for the question. Am I audible?
Yes, sir, you're audible.
Okay. So, Rohit, let me give you a brief context on what I believe CFO's role was and is now. Around almost 12 or 18 months back, I had written a blog called Rear View versus Front View CFO. You know, when you're driving, you have a front view mirror, you have a rear view mirror, right? Now, traditionally, the way I see it is that the expectation from the CFO was to ensure that the past is clean. Basically, the traditional CFO used to be a kind of a rear view driver, where the expectation was that whatever has happened in the past, please ensure that nothing comes and hits the organization for all the activities or deeds or decisions taken or measures taken in the historical period, whether it is tax compliances, whether it is regulatory compliances, whether it is tax filings, statutory filings, you know, or any decisions taken in the past, just to ensure that everything is compliant. That was the traditional role of the CFO, basically to ensure there's no gap at the rear end. It was more like a compliance controllership aspect that was expected from the CFO. Fast forward today, the rear view focus is no longer relevant for the current CFO, for the modern day CFO. If you keep looking at the rear view while driving and don't pay attention to what's in front of you, your bigger accidents can happen, right? If you're driving a car, you have to focus what's in front of you, not always focus on the back. So that is what has changed over the last maybe 5, 10 years as technology has got advanced, as we have seen so many innovations happening, so many changes happening. Today, the CFO is supposed to look into the future and identify what problems or risk the business can face, and those risks can come from anywhere. Nobody expected the pandemic to impact businesses in ways that it has impacted, right? Every kind of business got impacted, right? Or in the past, if when Apple came with the mobile phone, or sorry, the iPod, the Walkman was completely extinguished, right? How do CFOs, I mean, people expected this to be the CEO's responsibility, but I think more and more, as you see the historical data, as you see the trends emerging in your financial statements, being the custodian of the data that you have, how do CFOs use those data and analytics to predict the future, to keep forecast, to keep constant forecast of the business, to ensure that if they see any red flags in the future, you know, they can highlight it to the management and use the data to support their analysis of what's coming in future. And not only not only impacting the financials, but even compliance requirements or anything like sustainability has become such a big factor. Now, how are CFOs preparing themselves for the future as sustainability grows? These kind of things. So I think this aspect of front view driving for the CFO is becoming all the more prevalent and will be even more entrenched into the business fabric as time continues. And hence, here comes the aspect of automation. Here comes the aspect of transformation. I'm not saying that the rear view thing is not important. That is very important because the companies have to be compliant. You can't say that, okay, I'll forget compliance and let me just focus on my future trends and I'll give this valuable insights to the business. No, that is critical, but hygiene is important, right? So that's where I think automation and transformation comes into the picture. How do CFOs drive that agenda? How do they convince their board of directors to invest money in that automation and transformation journey, so that if all the routine aspects of their job or all the transactional processes get automated, it releases bandwidth not only for the CFO but also for the entire finance function, to focus on more value added activities where they can start looking at how they can impact business from a future standpoint, right? So if you automate your accounting processes like invoice, vendor invoices, your cash reconciliation, your accounts reconciliation, your closing and reporting, right? Then the bandwidth that gets generated can be utilized by the CFO and his team, his or her team, to focus on these future activities. So I think CFOs are under tremendous pressure to transform and accordingly then identify what prioritization needs to be done, right? So it this thing about transformation, Rohit, is a given, right? No CFO is kind of immune to it. I'm sure all my fellow panel members here are looking at transformation in some way or the other. I can give you example. In my organization, we have done 3 interventions. 2 have already been implemented. One is underway, where one we implemented a travel and expense platform, which automated the entire system of invoice, travel and expense billing. We are implemented our accounting system moved to cloud version, which provided us a lot of scalability on our accounting system and closing and reporting. We were able to shorten the timeline for closing reporting once we moved to the cloud, given the scalability possible there. And now we are in the process of implementing a pricing and automated invoice automation. Now, if you look at all these are very transactional processes like pricing, invoice processing. We are doing that, and we are now able to provide, using that bandwidth, being able to have more meaningful discussions with our businesses on what are the profitability drivers for the businesses. Where is the cash stuck up? How do we improve our cash collection processes? Now the discussions that happen is about improvements, process standardization, simplification of the process, which in turn leads to cost savings. So I'll pause here.
Got it. Got it. Very, very nicely explained, Rahul sir. So, my dear viewers, the agenda for this was not to be a backlooker driving the vehicle, start even focusing on the foreseeing when you're driving the vehicle, understand the change, understand the analytics from the base data, whatever you have, drive that entire transformation. With this, we go with our next question, which is on business transformation, which will be taken by Deepak Iyer sir, who is a senior director at data analytics at Capgemini. He has been into consultancy for doing this transformation. So my next question to Deepak Iyer sir will be, how current CFO is driving business transformation as explained by Rahul sir. So what are the key steps which you have seen that this is the areas where transformations have happened, and especially if you can highlight that these are the last 2 years where the transformation is like enhanced more and more.
Yeah, thanks, Rahul, for this question, and good afternoon to my fellow panelists as well. As you rightly said, right, and some of the fellow panelists also mentioned, today's CFO's role has fundamentally changed over the last decade or so, right, and more so, of course, after the pandemic, the CFO is no longer a gatekeeper and a custodian of the finance business, but is looking at more, supporting as well as driving digital transformation initiatives, right? especially I would say in the last couple of years, given the uncertainty, given the fact that going forward, it is fundamentally expected for the CFO to drive new business models, to come up with new ways of working, to fundamentally change the way businesses function. The role of the CFO is really increasing to leaps and bounds, right? I can give you an example of an auto manufacturer that I worked with a couple of years ago. Traditionally in the auto business of providing sales and services, but fundamentally looking to alter the business models because of the fact that they need to come up with new revenue work streams. And then how are you looking at, for example, getting into the lease business, into the fleet business, given that there is a change in the background that you are witnessing, not only in the environment but also in terms of the ability for you to transform that function single-handedly, right? So in this particular case, what I would like to kind of talk about the role of the CFO in driving this kind of a digital transformation, right? When you come to, for example, when I talk to CFOs, some of the things that they talk about is in terms of how do you ensure the finance function fundamentally transform into a digital finance function, into a touchless experience, right? And this is where I see a lot of organizations, the finance functions, the CFOs leading transformational initiatives, be it ERP initiatives, data or AI initiatives, cloud initiatives, as some of my fellow panelists talked about, in multiple areas, right? This could be around legal compliance and disclosure, as well as internal management reporting. And how are you able to bring in the best of class technologies, the ERPs required, and then the ability to kind of disclose financials and close your books in an expedited fashion, right? It could be related to budgeting and forecasting. And how do you not only look at traditional ways of doing budgeting and forecasting, but bring in AI, intelligence, predictive modeling, look at extraneous factors, not just within your enterprise, but what are analysts saying, what are researchers saying, what are your competitors doing, what are your macroeconomic factors which are helping you to budget, forecast, and plan better, right? The third thing is around automation and analysis, right? And how are you able to bring in more automation to bring digital nature to your business and enable the analysis required for you to be a more transforming organization, right? A fourth is in terms of data and analytics and AI, and this is where I see a lot of focus in the last couple of years, where CFOs are fundamentally looking to drive the business through the power of data, through the power of an analytics, and then also bringing in artificial intelligence, machine learning to fundamentally transform business models and ways of operating, right? One of the things, and I think was one of the fellow panelists talked about, is in terms of moving from traditional accounting and finance into more performance management, looking at ways to improve your profitability. How do you unlock some of my costs and bring more potential to every rupee that I'm earning? And how do you bring in the performance management techniques to ensure that your product managers, your customer managers are kept honest and have real-time visibility of their performances, right? Here I think ERPs like SAP, as well as some of the analytical tools available, whether these are cloud tools, giving a lot of impetus to the CFOs to look at not just traditionally transforming the finance function, but also looking at forward looking in terms of merger and acquisition scenarios, divestiture scenarios, to enable the finance to not just be a gatekeeper function, but also look forward and beyond in terms of enabling business transformation, right? So I think in conclusion, what I'd like to say, Rohit, is that the CFO's role is no longer just a gatekeeper, right? But I see four key themes in terms of what CFOs are today doing to drive business transformation. One is in terms of motivation and stimulation, right? And how can CFOs today drive digital transformation initiatives, bring in fundamental change in terms of business models, and take the whole business forward in terms of adopting new ways of working, right? Second is in terms of strategy, and not just, of course, being responsible for finance strategy, but overall business strategy, right? And how do you drive the business change through the organization, through your various connects in various departments, and then be a strategic leader. The third, of course, which has been a very traditional function, is in terms of stewardship, in terms of gatekeeper, and then enabling your, to kind of manage your assets better, to enabling better risk management, to be more legally compliant, to close your books faster, and a typical steward function that the CFO has traditionally been very good at. And then number four is in terms of an operations functions, right, which is essentially managing the traditional business, ensuring that your the finance function is upskilled, is looking at more traditional bookkeeping methods, but also looking beyond to data and analytics to facilitate a better and a smarter finance function. So I'd like to take a pause here, Rohit, to see if there are any questions before turning over to the next panelist.
Right. So, Deepak, what we will do is we have got like multiple questions from different channel. We are accumulating everyone and we will ask it in the last, so that we give a fair view of other panelists and speakers where the questions might actually solve. Now we will ask the same question to Raghuram Krishnan sir, who is senior director in Adobe. What has he led from a CFO angle, that these are driving business transformation in business transformations and other areas as well.
Thanks, Rohit, and good evening, everyone. My fellow panelists Rahul and Deepak have covered a lot. I'll try not to repeat myself. And the analogy that Rahul used is of the rear view mirror, and it's a term that we've been using as after the fact reporting and how it's transformed in the last 20 years into a foresight. We are no longer even insights, right? We've moved into that next stage of foresight, and that's how the transformation has happened. And Pratik also set up the genie question in his last slide, right? What is it about digital transformation, automation, single source of truth? I think every finance person will want to do that. He's referred to it in a compliance perspective, and I think across the CFO organization and even sales organization, we will want that to be applicable. And what's also changed is the source of information is real time today. I mean, most CRMs that you use, at a point in time, you had to wait for a month end or a week to complete for you to get actual data. It's running real time, and you don't need a finance guy to tell you how your business is doing. For most part of what's happening, and the things that have changed is the disruption and the urgency is the order of the day. Something that as a function, as an organization, we've all kind of held back investing in finance functions for a long time. We've been very slow, very measured in how we invested. I think that the pandemic changed that whole pace. And the reality of how the CFO's role has changed is CFO has a permanent seat on the board compared to many other CXO roles. And that's why it's becoming more and more important how the CFO is expanding their responsibility. And there is a recent survey of Fortune 1000 companies where 81% of them view that CFO is no longer a controller role, it's a strategic business partner role. And you would have heard some of these announcements that's happened where the CIO function has actually rolled up under the CFO now, where they're able to look at investments in terms of the organization and the finance function itself. Now you can add a lot of investments into your organization, and if your finance is not equipped appropriately, then your output is not going to be there. And I think that is evolving significantly. And what we've also done in terms of transformation is that they already spoke about automation, and a lot of that is happening across different verticals within the finance function. But what is also changing is the divestment. One part is investment, and what we've learned in the last 2 years is that we can do a lot of things without having to spend the kind of money we were used to spending. Travel could be one. The virtual concept was not acceptable in any organization. And today we can have a hybrid model which is working, and we are looking at how do we kind of divest those costs into other aspects and without having to eat up into your margins. And I think that's evolving, and I think it's heading to the right place. Hopefully, we don't take the foot off the pedal for us, but otherwise, this function is very, very necessary. It needs a lot of oxygen in terms of the automation investments that needs to happen for us to be able to keep pace with the way the organizations are growing.
Right. So the key thing which I take from these set of speakers is, previously the data was a monthly mode, where we used to get only after the month and first week we know what was the last month data. Now the data is seamless, the data is more real time, the data is available on mobile. Okay, that's the entire evolve in all the systems we do today, whether it's accounting, whether it's bookkeeping, whether it's operations, and moreover. So right now, it's never actually seeing again the first criteria, right? It's never actually seeing the back window now or the back transaction now. It's actually seeing where we are right now, where we want to go after 1 month, 2 months, 3 months, and then taking a course corrective actions. Well said that now CFO holds a more important role in the executive directorship, and also the information securities and information officers are being part of the CFO's ambit under the larger scheme of things. I think this is also a key area now CFOs are evolving together. Right. With this, we also move to our next question to again Deepak Iyer sir. Uh, Deepak Iyer sir, I want to like really understand how CFOs today are thinking more about sustainability. Okay, so we are hearing about a lot of things that companies are doing for sustainability, but we want to understand what are various companies thinking forward with respect to sustainability.
Right, Rohit. Great question, right? And very topical in today's day and age. Sustainability is, of course, the big mantra for most CXOs. And I'll give you my view in terms of where does the CFO, what kind of challenges that the CFO, of course, faces in the realm of sustainability and working towards a more sustainable enterprise, and just talk about a few topics in terms of where sustainability is kind of being addressed by CFOs, right? So of course, to start off with, sustainability, uh, a decade ago probably was something that we saw on Discovery Channel, but it is real today, right? And whether it's climate change, whether it is social impact, whether it's the impact of governance, I think it is very very real today, and it has a wide range of impact for most organizations, right? Whether this is related to the competitive advantages of organizations being at risk, or other legal or social implications. This is something that organizations today cannot ignore, right? And today, and what I'll kind of talk about is how CFOs are enabling, or at least trying to address topics around sustainability, right? Some of the key factors that sustainability typically addresses, or is at stake, is there could be political factors, it could be social factors, it could be economic factors, legal factors, of course, environmental and technological factors, right? And needless to say, whether it is climate change, whether it is legal regulations, whether it is pressure from society, whether it is environmental constraints, whether it is more R&D required for technological purposes to enable a more sustainable enterprise, CFOs need to recognize today the fact that they play an extremely important role to address sustainability topics, right? One of the challenges today, I generally in my discussions with CFOs, I see that while there is an urge to do this in a more sustainable fashion, they are yet to recognize the importance in terms of how they themselves can be a perpetrator and a leader towards sustainable objectives, right? I generally see three key implications. One is in terms of governments and regulators imposing more regulation related to social causes, related to climate control, and how to take that impact into the enterprise, right? Second is in terms of investors, analysts, and the fact that ESG scores are today being provided so much importance in terms of funding, in terms of investing, in terms of the next big bets in organizations. Hence the need to have the ability to kind of not only look at regulatory compliances from a financial perspective, but also from an ESG standpoint, right? And third is the fact that today's customer is extremely environmentally and socially savvy, and hence the buying patterns are extremely dictated by how organizations are addressing sustainability causes, right? And because of this, and because of the fact that some of these ESG issues are so connected, right? I mean, you cannot isolate an ESG issue to only the finance function or the sales function or the marketing function or the R&D function of the organization. A lot of these are so interconnected. Hence, I see that CFOs are uniquely positioned today because of the role that they currently play in the organization, right? Because of the fact that they have in-depth knowledge on data, processes, reporting ability, they play an extremely critical role in terms of sustainability, right? Some of the issues I today see that CFOs are running against is a lack of common regulatory know-how in terms of how ESG issues or sustainability issues are impacting the organization in a more holistic fashion across the industry, right? There is no common regulation available, and while organizations are looking to be more sustainable in their products and services, there is no benchmark available, right? And that's one of the key challenges that I currently see. The second is I also see that while organizations are making big strides in terms of technology enabling analytics and reporting and financial compliance, there is no such processes, data, and analytics available specifically for ESG topics, right? And I see this as a key inhibitor for CFOs, enabling a more sustainable enterprise. The third is in terms of the ability to monetize sustainability data, right? And how do you ensure that sustainability data, whether it is carbon data, whether it is social data, whether it is governance data, that you generate within your enterprise, how are you able to determine and use that to positively influence your business and financial strategy, right? I see this as a key roadblock today for us to ensure that the way CFOs have been able to make a positive impact on performance, on financial performance. How do you ensure to make a similar impact on sustainable performance, right? And then the fourth point is in terms of sustainability criteria in itself, right? Like I said, there is no benchmark available today as there is on the financial side. So how do you ensure that while CFOs are extremely bullish in terms of of achieving the 3 Ps, which is your planet, profitability, and people, and achieving broader than a financial bottom line, to kind of look at a green bottom line, a social bottom line, and a financial bottom line, there are no such criteria that is available which is fundamentally accepted, right? And the last key thing I would suggest is that in addition to your ERPs not having the ability to track ESG data, also there is no standard way in terms of how you are able to use scenario based planning to look at forward looking situations, to assess how ESG compliant you can be, but also what kind of business strategy that you need to enable to ensure that your products and services are extremely compliant, right? So I would say these are some of the challenges that I'm foreseeing today, Rohit, in enabling CFOs to be the driver towards sustainability. I am very bullish that because of the role that the CFOs play in a motivation capacity, in a strategist capacity, in a steward capacity, and in an operational capacity, that they will be one of the key drivers towards organization being more green, more sustainable within their products and their services.
Right, got it, got it. I think Rahul sir, we would like to get your views as well, like how CFOs are thinking and working towards sustainability.
Sure, Rohit. And I think Deepak covered most of the stuff, but let me say I think CFOs are in a I'll say in a unique position to drive sustainability more, not conceptually, or I'll say not implementing sustainability, but more importantly tracking sustainability and measuring the impact of sustainability. See, as you know, the fellow panelists mentioned, sustainability is not about just implementing, but ensuring that it's showing results, right? It's not you go ahead and say, oh, did this for the planet, I did this for the planet, but you have to show the results and how it is impacting, how is your organization impacting sustainability. And with government regulations coming in, it is all the more important that I'm sure as things will progress and more debates happen on sustainability, your annual reports will also have to reflect what the company is doing on sustainability as a permanent feature. I'm sure many companies are already reflecting that in their annual statements and in their investor presentations. But it's going to become, I'm sure, a key reporting factor as things progress on this. So that's where the CFOs come in, right? I think the CFOs need to, one, have a dialogue with all their counterparts and all their stakeholders within the organization to see how the measures that the organization is taking around sustainability impacting the overall organization, what they are doing to what is the impact of sustainability on maybe HR, maybe on operations, logistics, all those departments, and what is the interplay. So that is one thing that they need to understand. Second, I think the other key role that finance departments have in playing is to ensure that the sustainability metrics are provided to both internal and external stakeholders are relevant, right? And that is where our experience comes in, because we, being the custodians of data, are, I think, the experts, I would say, in providing the right metrics to the right stakeholder, right? What metrics do we need to provide to HR? What metrics do we need to provide to the CEO level, or to the business guys, or to the sales guys? Knowing that helps us ensure that when it comes to sustainability, what are those right metrics that need to be presented to the to various stakeholders looking into sustainability. So I think that's where CFOs have a key role to play. The other thing is, as key players, CFOs bring very unique skill to the table in terms of measuring and tracking non-financial achievements also, right? Because we are experts in financial reporting, we are experts in financial analysis, we are and preparing dashboards. But how do we use non-financial parameters? That's also because we have been exposed to all the data that the organization collects. CFOs are in a unique position to present that non-financial metrics, and this applies to things like risk analysis, as well as governance, internal monitoring, measurement, prevention, mitigation, and third-party assurances. Second, the one factor I would say is that the methodologies for tracking and assessing the financial impact of sustainability measures are also becoming more and more advanced. What kind of accounting methods do you use for sustainability projects, right? So these are also not one-time projects. These are long gestation period projects. You don't achieve a sustainability overnight. There is a sufficient time gap or a gestation period for sustainability projects to deliver results. How do you account for those sustainability measures, right? So that's where again the CFO's role becomes very, very critical. Another factor what I would say is that the ability of CFOs, or their skill to develop new tools and solutions like internal dashboards, which I just mentioned, as well as individual and collective performance criteria. I'm sure in many organizations, including mine, finance, the CFOs are involved in developing KPIs for their for various businesses, whether it is HR leaders of the organization, whether it is the sales leaders of the organization. So this expertise of theirs to build KPIs, whether financial or non-financial, because how the interplay of these KPIs impact the company's performance, can be leveraged to do a similar kind of exercise for sustainability projects and sustainability measures also. So Rohit, these are some of the factors I'll say the CFOs are working on right now when it comes to sustainability, and that's where their core strength is, and which they are leveraging now to support the organization on sustainability measures.
Got it. So, to all my viewers as well, sustainability has been a topic of relative importance, and of late it has got a very high importance in subject of all types of mechanism. To be very honest, there is Tata Mutual Fund. They have created a fund which invests only on sustainable companies, which is called Tata Ethical Fund. To that ratio, even mutual fund companies are trying to create a fund which is focused on companies which are driving towards sustainabilities. And as you rightly mentioned and heard it from Rahul sir also, that from sustainability, the metrics you get is not sufficient. You will get only financial metrics. There are also non-financial metrics which you need to understand and analyze going forward in that direction as well, because it is all investing, whether it's time, money, effort, it's all investing, and you need to get something out of it, whether it's financial and non-financial, right? So right there. Now, let's move on to the next question to Hemlata Nivitya ma'am. Hemlata Nivitya ma'am is CFO of Allstate India. The next question to you is, ma'am. So, as per the latest study from McKinsey, KPMG, and all, okay, last 2 years, the average CFO span has come down from 6.2 years to 4.8 years, which by the purview itself brings that there is a lot of pressure on CFOs not to look on financial domain in Xylo mode, right? What, in your opinions, are the possible reasons for changing responsibilities and unchanged perspective?
Okay, thank you for having me here. I hope you're able to hear me, Rohit, because this app is not supported. I've been struggling to kind of get on the call. So you're able to
Right.
hear me clear?
Absolutely, Hema. We are able to hear you clear, loud and
Well,
clear.
okay, okay. So on your question, and I think the panelists have kind of explained the whole role of a CFO in driving transformation in other areas. So I'm going to pivot towards what you just asked now as the span being brought down. And honestly, if you look at it, probably a decade and a half ago, CFOs were probably looked at some people who just manage the books of accounts. They're more audits, inward focused. That's their role, working capital requirement, get funds, and so on. Today, it all boils down to building a sustainable team and having a good ERP system so that the basic functions, which have become table stakes today, right? We have to be kind of looking into this. That has to anyway happen. I'm not diluting the importance of having a good governance, good accounts, and you need to obviously have the compliance and all of that taken care of seamlessly. And that's a non negotiable kind of a role that the CFOs have to play. But then I think it has now become more relevant for a CFO because honestly, if you just did that, you would become redundant in a few years. You would just be doing the back office accounting. So we are looking at being business partners in its true sense. How do you work on business cases? How do you secure funding? Funding, when I say, is investment approvals. Sometimes you need to go back with the business case. The ROIs will take up a couple of years for it to fructify, but then you're going ahead and saying we need imperative to make these investments today to be relevant there, right? So it becomes, and if you want to remain an integral part of the leadership team and to have to partner in decision making, becoming a consultant to the business, and the consultant could be in lieu of the demand and everything that's rising and the great resignation that's happening. How do you proactively have a talent strategy in place? How do you have a location strategy and thereby a sourcing strategy? So all roles for our organization, for instance, need not be coming into India, need not come to us. Some can be sent to a vendor because you're looking at probably the tenure of that particular project is short stinted. So you would send it to a vendor versus having it in-sourced, right? So these kind of decision making become very, very critical. And the CFO sitting there at the seat, he needs to have a seat at the table. He needs to have a voice at the table. And then you need to make it, I would say the business case has to be compelling enough for us to make those investments. Also, I think you take the realm beyond the accounting function. So you would look at maybe a real estate facilities. Location strategy becomes a very critical role. Picking up shared services center. How do you set those shared services center in India? It could be a cost arbitrage, but it also could lead to more value creation. So how do you kind of make that a business case for your folks in the various parts of the globe to kind of look at India as a strategic talent advisor or a partner, right? So this, in my mind, is how a CFO's role has evolved over a period of time, and unless we do this, we just become redundant, irrelevant, and then it's just going to be one of those figurative heads occupying that chair and doing his or her stuff. And also, if you have to justify your costs, you've got to kind of deliver more value to the organization. I'll pause here, but I hope I've just captured the main points out here.
Absolutely, absolutely. I think you were brief enough in telling what has been the perception and what has changed. With this, we'll also, so you also spoke about the shared course per learning spaces and all, right? So my next question to Raghuram Krishnan sir will be, uh, sir, what were the biggest learnings you got from lockdown and how that company has adapted itself in this transformation journey?
Yeah. So I'll just add to what Hema very beautifully put across. I think we have to, as a function, as a finance function, realize the value that our roles bring in, not just at the CFO level, at every finance function. You actually check finance folks most of the time have the most amount of knowledge across the organization. And we do not leverage that knowledge at many parts of our journey in professional life. We stick to our component, but actually if you expand in how much of knowledge we carry, I think that's how this function has started getting powerful over time. And that's why at the CFO's level, is CFOs expressing that. And I think we should start doing that across various levels. Specific to your question, I would start by saying I think a CFO during the pandemic period got us out of the darkest hour, if I should say that, because a lot of stress happened and unknowns happened and people had to pick up. The wave one, I would say, we learned the value of liquidity. If you looked at balance sheets prior to the pandemic, it all looked rosy in how we had projected it. But when pandemic happened, you started questioning how long can you sustain the business if lockdowns happened, if business was not rolling in, if money was not coming in. And you would hear across different organizations, they could not think of beyond 6 months or 5 months in some cases, which was very scary. And I think what we did eventually, I think by probably the second wave, a lot of companies figured out how to manage liquidity and much more efficiently in that. And of course, supply chain digitization of vendors became very critical because money coming in and going out was also very important. And finance could seamlessly operate on a remote structure to a large extent. There could be some. I think we learned that we don't have to live using massive Excel files. And in my own team, we had the habit of building massive pivots and macros, and we enjoyed, creating these massive files and sending it out to people every year, every month. We realized that could not have happened if we did not switch in 2019 to a visualization tool. We could not have sent these massive files out of your home uh, because internet was patchy in places where people had moved into. That was an impossible. So we were probably, in hindsight, we were a little early in that transformation journey. And the second wave kind of got us the value of people beyond business. And what it did is the impact of that was we accelerated investments in automation and tools and in wherever it was necessary. We focused on the RPA, which was binary, right, which had a yes no function. We were able to quickly switch to that. But I think where automation has not happened significantly is on the FP&A side. It is still, how the data is processed and integrated between your ERPs is still not that advanced. And I think that's where a lot of companies are focusing on integrating between the visualization tools versus the ERP. And that was a big learning for us to have switched. And we used to have calls with a lot of CFOs around that time. How are you, supplying reports? How is your data being used and everything? So we kind of found ourselves in a better place. And we've also learned over this course of time, and I mentioned this in my earlier responses, we've understood where cost can be managed better. And there were a lot of basic costs today that we are able to control. That was a taboo to even discuss. If you go to a sales organization and told you can't travel, that was not a very interesting conversation. But today I can very openly talk about that, saying only these kind of meetings are allowed for travel and the others need to be done virtually. I can create whatever rule that kind of takes care of that. What this has helped is to look at margin and profitability of business in a very different way, which we struggled at times to achieve. We had to take some harsh decisions to do that, but I think we can now in a much smarter way achieve those goals and results without having to take harsh decisions. And I think these are all learnings, and I hope we continue to build this, because what this does is the ability for us to generate that additional margin or the profit that we are trying to build helps us reinvest without having to look for additional capital. And as the business is getting competitive, the reality is you're going to discount much heavier in this competition. And especially if you're fighting with startups, it's even more competitive than you would within two enterprise companies. But then your cost is also going up. And Hema kind of touched upon the topic of the great resignation. And it is a fixed cost that's going up for every organization. Raw material cost is going up. So I think a lot of this balance we've learned in a better way in a much shorter time than we would have. We would have discussed this forever, but we were unable to implement a lot of what we've learned in the last 2 years. So I think this has really helped us accelerate and probably gives you gives many companies a lot more legroom and a lot more of the runway for us to sustain and change things for the course of accelerated growing.
Right, got it. Like most of them were forced to be learned rather than we ourselves only getting learned. I think that was the change we have all to be taken care of. Same question to you, Hema. What were your biggest learnings during the lockdown period and how that company has adapted itself in this transformation journey?
Yeah, I think Mr. Raghuram explained it well. And if I just bucketize it into, say, people, and then I look at how we kind of adapt it. So I think adaptation, and that is a virtue that human beings have, but we don't, unless we are tested, we don't necessarily demonstrate it. I think for us, the ability to understand the needs of the people, and we were very agile. So our operations folks did not have systems in their house. They obviously had desktops on which they would work and dual screens. And so when the lockdown happened, we were like for 2 months trying to figure out how do we get understand this world. And that meant that you had to get agile, you had to procure assets for them, we had to ship assets across the country for them. So that was something that we took as an action immediately. The risk was we also had a lot of backlog happening because we were not able to process, people were not productive. So we had a pushback, and then obviously the global folks were also understanding enough. So they picked up the volumes, etc. So this kind of a game, or rather balancing act, kind of helped us ensure that business was on track. The myth around the fact that you can't effectively work from home was busted. In about 6 months' time, everything went business as usual. I mean, people were working from home. Now that has a different problem. Today, people are not willing to come back to office. So that's that's the other battle we are having to fight today. But I would say we managed to hire about 2,500 people during COVID. We actually call them COVID babies. They got hired. We got to integrate them into the culture. So that's the next league as we are approaching the endemic. I would say that is what. So I would, if I had to summarize, it's probably being agile, the risk taking ability to understand what we need to do, where do we need to invest. Transformation, like Raghu called out, was very, very critical. So a lot of things got accelerated because of the pandemic. And the digital adoption, I would say, the fact that you were able to repurpose some of your budgets towards making more meaningful investments, I think those were there. The real estate also, while there was this requirement from different parts of the enterprise to say, okay, you're effectively working from home, why do you need a real estate in India? Right? And we said, no, this is, you got to watch and wait, because the average age of an Indian employee is probably 28 to 30, versus in the US, they are probably 45, 50. The cultural integration becomes very, very critical. They need to come to office in some shape and form. They need to interact with the teams and all that. So these kind of decision making and all of this, I think, apart from the digital piece, which Raghu anyway spoke about, if we were to look at these, I would say agility, risk taking, simplifying the process, ease of doing business is what we would call. So making investments, we got Concur implemented during the pandemic. That just ensures that people don't have to now submit physical claims, right? They just kind of go about doing it on the net. Internet reimbursements became a requirement. Now we've kind of outsourced this to our payroll vendor, and we said, look, take care of it. We don't want our employees to be submitting bills every month, or even if they do, the headache of reimbursement goes with with the payroll provider. So I think these, and more importantly, what we ended up doing, Rohit, was hiring proactively to meet the demand requirements. The great resignation we touched upon, that was happening. It's a global phenomenon. It's not unique to India. But because it happened, it also helped us kind of accelerate a hiring process. So we were ready, and we also gotten technology adoption in the sourcing part of the TA. If you look at talent acquisition, your biggest time that you spent is in sourcing the CVs, trying to match them to the JD and trying to make semblance. The JD always says, I need a Superman to come in, and I'm going to look at who do I need to hire and how do I make the demand happen. So adopting tools that help you cut down on that time, that allows you to focus on more quality hires. I think these were some of the steps that we took to kind of, uh, I would say the pandemic has its plus points as well. With all due respect to everything else that we have kind of suffered because of it, a lot of our myths got busted because of the pandemic.
Got it. I think the same feeling we also had. Working from home is a myth got busted. I think we also had the same,
I
right?
personally always felt working from home is not something that's effective. Today, I take back, I bite back all of that, and I say it is effective. It's just that the work-life balance needs to be looked into, because we end up working for 12 to 14 hours versus having a log-out hour, at least our folks, etc. So that is a separate thing that we're trying to focus on. But yeah.
Absolutely, absolutely. I think you touched upon the areas of hiring, automation, using of technologies, and all that. So my next question will be on the similar lines, that what were the big leading ways of digitization and automation, and how has this impacted your organization? Hema, to you, same question.
Yeah, so one was the simplifying the process for our employees. So that was one that I just spoke about. We did Concur. We also went on cloud. So we have S4HANA, which is on the cloud. So the accounting, all of that has become seamless now. Power BI is something that we've all adopted. We're trying to see how is it that we can get across information. And we're also partnering with the US folks on a bunch of other things, which is like your ITO sourcing. We call that IT professional services. How do you get sourcing dashboards? How do you get information to say, if I went to X vendor versus a Y vendor, what is it that you're getting in savings real time? So that's one. The other part is on the TAPs that I just spoke about, adopting technology to ensure that we are able to optimize our time on the sourcing part of it. We also managed to set up the shared services amidst the pandemic. So we grew our procurement. So 50% of our global procurement team is now based out of India, doing global roles. So that's the first traction that we have. We are also doing the legal process outsourcing, if I may call that, and that is also through, we are looking at automating a lot of these processes, getting people in through contract, so a lot of innovation has come to play, Rohit. I mean, we are now more, our ability to take risks and calculated ones. I'm not saying those kind of risks. I'm saying calculated risks to understand where do you need to put your bucks, where do you need, and also I'm just digressing a bit, we're also looking at investment in certain capabilities in India. So what is India known for today? When I say India, I'm talking about our organization. So we are about 6,500 employees today. What are we known for? What is your unique selling point? Making that kind of a business case, again going back to our stakeholders and helping them understand what is the value we can create. It's there in pockets. We're trying to make this more at an enterprise wide level awareness of sorts. So these are some of the things that we have done. And I would say that this whole digital adoption by every department in the organization has got accelerated. So whether it's HR, it's finance, it's business, name it, and they're all looking at how is it that you get automation up and about, and making investments in RPA that we just spoke about. We also have an innovation lab that we have. We're looking at what are the business problems, how do you actually identify what the business problems are, and try and solution on it. I mean, we are very nascent stage today, but those are the things that we have done as an organization from an India perspective.
Absolutely right.
Rohit, if I can add to Hema's thing.
Yeah, I was about to ask you.
I just had
Raghuram.
one word to say. The pandemic period, the CFO organization has had the highest investment in terms of people and technology. That was usually the slowest. The front-facing functions usually got the priority, and finance was always kind of slow, or the investment kind of was delayed. I think this period, the value of what that function needs to deliver in situations like this, I think just came to the forefront, and you could see both of these happen in a very rapid pace, and it continues to happen.
Right. Absolutely, absolutely. So I was not able to load all the question, but there is one question. I'm sure I would recommend Deepak Iyer sir to take it. This question is from Shailesh, and so you would have seen like a lot of implementation of digital initiatives. So this question from Shailesh is, what do you see as the success rate of implementation of digital initiatives, and if there are failures, what are the primary reasons of failures?
I think that's a great question, right, Rohit? So I'll talk primarily on the finance function, right? A lot of initiatives, of course, in the last 4 or 5 years that we as Capgemini are driving is around digitization of finance functions, bringing in more automation, bringing in more ability to look at analytics and data as a key enabler for business transformation. And I would say the success rate of these programs are quite high. Right, I would say anywhere between 75 to 80% of programs that we do are successful. They are able to meet business objectives, and we are able to, of course, work with our CFOs to kind of measure the objectiveness of the success and then to drive the business objectives as well. Right, I would say for the 20% or so programs that do not succeed, I would say primarily three reasons. Right, one is change management. To me, I think and the resistance of to change is one of the big drivers in terms of programs not being successful. Right, and I can take an example of an insurance organization that I was working with about 3 years ago, where we did not have a very successful transformation program, especially because there was resistance to change. Right, and the fact that business and technology were not able to be aligned on the same platform, and there was a key resistance to change from the business side to adopt new ways of working. To me, I think that's number one in terms of reasons for failure. The second is also in terms of as one of my panelists also mentioned, is in terms of the leadership driving support to these programs. Right, and again, this is one of the key reasons I've seen, is that not enough leadership direction and motivation for programs to succeed can typically result in lack of adoption from the business. Right, and I see that this is one of the key drivers in a number of programs that we run for programs not being successful. Right, and I think one of the key topics there is, how are you able to build a business case for these kind of technology programs, and how are you able to mature the business case throughout the course of the program to ensure that it is as closely aligned to business objectives as possible. Right, and how are you able to drive leadership support for these kind of programs? To me, these are two or three key reasons, Rohit, that I see programs that are of transformational nature do not really meet the key intended objectives. Rohit.
Absolutely, absolutely. I think I would like to just give my view is, until and unless we take the decision, we don't know whether it's going to be a success or a failure just by looking at the idea or the framework of the ideation or validation, right? So somewhere we need to be prepared, ready, that out of 10 2 may actually not be of that particular success metrics which we are giving, but that also will give a lot of learning to the organization, that okay, this works, this doesn't work, and that's my personal agenda, personally what I have seen in various initiatives. Right now, we are close to our time being of conclusion. I will just recommend, Raghuram sir, like, any final advice for the next batch of CFOs or the upcoming CFOs that start looking at these functions proactively, so that when you have the in charge, or when you get the charge at the face of becoming a CFO and CEO, you are not new to those subjects, and you are already prepared for taking actions or taking decisions in that areas as well.
Yeah, so one of my uh, broken record statements is know your business, right? Many of them who join are very focused on the job or what the job description says, and we have this habit of picking and running, not realizing where we are running. So I usually ask people who join my team or the function that I work with is to understand what your products do, what is the impact of your product in somebody's daily life, if it's related to that, and how are we measuring that business. So one is you build a certain connection to the business. Second, your ability to understand the numbers of that business and the impact changes. Typical behavior is to look at data alone and try to make sense of it. And if you don't understand business, your ability to convert data to meaningful KPIs, results, or even ideas or suggestions is very minimal, or rather doesn't exist in most cases that we've seen. So that's one I usually say. And as a finance function, I think we should stop looking at us as being gatekeepers. We are not the only ones to say stop spending or I do not approve. I think we should start also being solution providers. it could not work in a certain way, but we have to identify how else can it work or what is allowable for it to work and start becoming a business partner. We are all in it to let the organization do well, and at the same time, bring in, at the back of everything, all of us have the responsibility of compliance and all of that. But I think we have to change our mindset to becoming a business partner. And as a function, I'm basically saying things that I've actually put into practice. My entire FP&A team are business partners today. We are not a team without a face. We interact with our business partners irrespective of who they are, whether they are on the R&D side or sales side or any function. We interact with them in person. We understand what's happening with the business. These are not reports we've shot and we've forgotten them. So we've stopped all of that. We've automated everything in a manner that everybody has their Tableau or Power BI on their phone. We have started doing this of storytelling. Our team is going through a lot of coaching around how do you tell a story around numbers. Storytelling on numbers is the most boring thing to do. Unless your numbers are looking green, there is nothing much to attract the audience. So that is an art that we all have to develop. It's not about talking a difference between A and B and how the story behind that, and that is very important. That's becoming very critical when you start interacting with your business partners. And this is where I feel we have to start identifying ourselves as a team, as a function, to evolve beyond just that gate. Yeah, that's a very fundamental role. I think that will continue to be in our core DNA as what we do. But this transformation is very critical for us to become more and more important. The CFO is growing in that role, but I think the function under should also start adopting and evolving into that.
Right, absolutely. I think that's the best we can actually try to achieve, that even finance function have partnership with the business modern's apprentice, right? With this, we actually conclude the session. I know viewers, you have asked a lot of questions. I'm not able to load it on my screen. We will come back with another set of the same CFO submit, and we will try to answer in those webinars and seminars as well. Till then, please stay connected to us, and we'll be more than happy to take up all your questions. I personally thank all my panelists who have taken a lot of time, given a lot of insights, given their and shared their personal experience on how the transformation works, what are the different verticals, assumptions, and metrics which now CFO has started looking onwards. I hope this session has given a lot of insights and ways in measures to see in future what things are evolving, and will be coming across similar webinars and seminars going forward as well, right? Jyotsna, over to you.
Thank you, Rohit sir, for steering the conversation excellently. And thank you, everyone, for the wonderful insights. Traditional CFOs were the rear view drivers. Modern CFOs are now looking at the future and taking things head on. CFOs are looking at automation, digital technologies, AI, ML, predictive modeling to transform their organizations. CFOs are doing and tracking sustainability with providing metrics to the relevant stakeholders. There are many thoughts that will remain with us, many points that we will be mulling over for a long time to come. But with this, we have come to the wrap for the India CFO Forum 2022 Virtual Roundtable Conference. I would like to extend gratitude towards Clear, the title partner of today's event, and Biz Integration, the organizer, and Via19, the media partner. Thank you, everyone. Have a great evening ahead. Thank you.
Thank you.
Thank you all. Bye.
Thanks a lot.